Credit and loans. Credit is simply borrowing money with a promise to pay it back later. When you use a buy now, pay later facility or take a student loan for university, you are using credit. When a bank or a company gives you credit, they are trusting you to repay, usually with extra cost called interest. A loan is a specific form of credit. You get a set amount today and agree to repay it in regular chunks over time. Imagine borrowing €5,000 to buy a second-hand car. You pay a fixed amount each month, and that payment includes part of the original loan plus interest. Loans are fixed because they start and end on a clear schedule. With a loan, you pay interest on the full amount you borrowed. Loans often have lower rates and work well for bigger goals like a car or a property. Credit lines like credit cards are flexible because you can borrow, repay, and then borrow again. This type of credit often usually has higher interest rates to pay back. What is interest? Interest is the extra cost you pay for the privilege of borrowing. Borrowing can be helpful or harmful depending on the choice you make. Some loans are secured by the item you are purchasing, such as a car or a house. If you stop repaying your car loan, for example, the lender can take the car. This type of loan with secured borrowing often has lower rates but real consequences if you miss payments. Unsecured products such as personal loans and credit cards do not require collateral. These usually have higher interest rates because the lender takes on more risk. Why does credit matter? Most big goals arrive before our savings do. Education, a first car, a laptop for work, even a first property. Used wisely, credit lets you act now and spread the cost over time. Handle it well, and you will build a strong history that unlocks better rates and easier approvals in the future. Handle it poorly, and it becomes a trap that drains energy, money, and confidence. Your credit score is your financial reputation in a single number. It rises when you pay on time, when you keep balances low compared with your limits, and when you build a steady history. It can slip if you miss payments or constantly use your credit limits. Lenders also look at your income, your job stability, and how much you already owe. They use all of this to decide whether to approve you and what interest rate to offer. Responsible habits make credit work for you. Borrow only what you can repay quickly. Pay on time every month. Keep your usage well below your limit. Read your statements so you catch errors or fraud early. Think before you borrow for things that lose value fast. Credit is not free money. It is a tool. Learn how it works, compare offers, understand interest, and protect your credit score with simple habits. Use credit to build your future, not to borrow from it. Start small, stay organized, and make every payment a step toward your next goal. To learn more about credit and loans, visit our website youthsense.eu. YouthSense is an Erasmus Plus project co-funded by the European Union. Our mission is to equip young people and youth workers with the financial skills, digital tools, and entrepreneurial mindset needed to thrive in today's world.